All right, so let's go ahead and review yesterday, Wednesday, the 18th. As we know, had a huge sell-off after 2 o'clock. So we will talk about that. That sell-off was one of the largest sell-offs by points in history. I think it was like the fourth or fifth biggest sell-off by points in one day. It wasn't that uncommon in terms of a percentage loss, but in a point loss, that was a very large day. So starting out, I have the fourth bar marked here, and often, almost 90% or more of the time, there's a trade that I have marked that happens before noon. So before noon Eastern time, there's at least one trade, and the majority of the time there's still one before 10:30. So most of those trades that are happening before noon are happening before 10:30. And here we have two marked here. So the first one, this bar 4, market opened basically at the close of yesterday. So from that, we would expect a trading range day would be more likely today. Now, we did get a pretty strong move up on the open here, but going into the FOMC, we had trading range price action. And then, of course, I mean, after when the FOMC happens, and that changes whatever the day had been previously. I mean, the FOMC can do anything. But this bar here, basically, what it is a bull bar closing near its high, and it's a reversal bar. So, we had these couple bars down here, and now we're reversing back above the moving average. Whenever you have a possible reversal on the open, it's usually good for a scalp. So you could take this for a swing as well. But one idea is that when you have a reversal with a bar closing near its high on the open, it's good for a scalp. So you can take it for a scalp. You can also bet that it's going to be the low of the day. Now, in hindsight, it's better to say that because it would have worked out as a swing trade. You could have taken it for a swing trade and managed it if it was not showing signs that it was going to continue up. But I think if you took it for a swing trade, I think you'd want to probably be out fairly quickly as it got up near the highs of yesterday. So probably after this bear bar, maybe some bulls would get out below that. I think I would rather wait for a second entry short. So this is just the first entry. So I'd want to wait for a second bear bar, which we didn't actually get until up here. So if you did take this for a swing trade, good chance you would have been able to stay in all the way up. I have this marked as a buy, and what this is in this strong, in this fairly tight channel up, we've now had a break above the 200 moving average. We broke above it, then we pulled back, and we got a good-looking bull bar. So I think that's reasonable for a scalp. This is one of those cases where we're not quite above the previous high yet, but because of the strength of this move up and because of this pullback, so we're not just buying at the top, we've already had this pullback that's happened. So we're buying after a pullback, then a strong bull bar. So to me, I like looking at that for a buy. After we've had this move up here, I'm starting to see a wedge pattern. So first push, pullback, then I'll call this doji bar here a second push, and then this all is the third push. So we have a wedge pattern through there. After this strong of a move on the open, this is still the open, and strong moves usually at least 50% of the time reverse on the open. So strong move, we're way above the moving average. Probably wouldn't sell on this first short, but once we've had this second chance to sell here, that's probably good for a scalp. We have room to get back to the moving average. We can see the bears went down once here, pull back, and then a second time. So with them trying the second time, bulls will probably get out of their longs here, causing the market to go down. And really after that, the rest of this is just sideways movement going into the FOMC. I do have trades marked here. I have like this marked as a short, and this would be good as a short as well. Let me zoom in. Like this short here or this short. Basically, these are below the moving average after we've had attempts up by the bulls. And unfortunately, if you did take either of these shorts, you would have gotten stopped out here. Well, so actually, if you took this short that I have marked, you would not have gotten stopped out. Although there's a good chance he probably would have gotten shaken out somewhere in here. I think either of these bars here, probably this bear bar, I would also mark. So ignoring the FOMC, let's say the FOMC didn't happen, and we were just looking at the price action here. I like this as a short as well. It'd be a second entry short. So we have a low here. First entry, pullback, second entry short. All right, it's below the moving averages. Looks to me like the bears are starting to consolidate some strength. And if it's going lower, it's probably going to pop down pretty quickly. So I think, I wouldn't take that because the FOMC is right there, but if the FOMC wasn't happening, that looks like a good short to me. So let's talk about the FOMC. The rates were decreased by 25 basis points as expected. So why did the market absolutely collapse at the end of yesterday? I mean, look at the size of these bars. These are huge. This is a huge sell-off at the end of the day. That is a 230 point drop in a couple hours. That is a huge sell-off. Well, the rates were decreased as planned, but the future rate cuts are going to be fewer. So when Powell was speaking yesterday, he was hinting at fewer cuts next year. So the rates are going to be lowered slower than what was expected. And the market did not like that. Something else, I'm going to pull up the Dow chart. The Dow has had 10 consecutive days of bear closes. So it's closed below the previous close 10 days in a row. That is the largest streak since 1974. So this is kind of quietly happening. I don't think many people are really talking about this, but the Dow's been down 10 days in a row, the most since 1974. As it gets closer to this 200 moving average, there would probably be some buyers around the 200-day moving average. You can see from what I have on the chart, anytime it kind of popped below the 200, it ended up being bought. And that's often the case for these indexes, like the Emini and NASDAQ. When it gets around the 200-day or 200-week, especially the 200-week moving average, then market often finds buyers around that level. Now, we've been in this trend up for a pretty long time. We can easily have more of a sell-off here, but often there will be buyers around that 200 moving average. So the E-mini, going forward the next few days, what can we expect? Well, after this big of a sell-off, we can expect some sort of more selling down. We're not going to have a 230-point day and then there be no additional selling. In the past few years, like during the COVID lows, we had some of the largest days in history during that COVID sell-off. And those largest sell-offs in history actually ended up being the lows. So those biggest sell-offs actually got bought. My concern here is that we are at the all-time highs instead of already being near the lows. Let me see if I can pull up the COVID lows on this chart. So it looks like I won't be able to on this chart. The COVID lows, we just had some of the largest days in history. Some of those, when some of those happened, we actually had some of the largest bull days in history after those. So that's something to be mindful of. But my concern with trying to predict this to be a large day of buying My concern would be that we're already near the all-time highs, right? So we're near the all-time highs. One way to look at it, we have this previous high. You can look at this as a failed breakout above, and then the bulls basically giving up below these bars here, causing this huge sell-off. So I think what's different from some of the previous large bear bars we've had in the last few years is that at this point we're near the all-time highs, versus before we were already late in a sell-off. So those previous largest days, they led to some of the largest bull days, but we were already late in a sell-off. Compared to this, we are early in a sell-off and potential sell-off. We are near the highs. So I wouldn't be calling for, like a crash or even a very large pullback. I'm not sure what's going to happen, but I would expect there to be at least some more selling. I would expect us to at least want to test down to this low again and see what's there. And I would expect there to be maybe on 5,800 around these lows here. I think that'd be reasonable for the market to try to get down to. Other things to look at when you have a strong spike like this, you can draw a measure and move here. So from basically just do a measure and move of the body of the bar, and that puts us down here in around 57.50 or so. And that would also put us around the 200 moving average. So if the market starts to head down again, I really think this would be an area to be looking at around the 200 moving average and around this 57.50 where this measure moves at. Speaking of measure moves, there's one thing I remembered I wanted to talk about on this chart that I didn't initially. So looking at this bull leg up here, where did the market pull back to? Well, it pulled back to a 50% pullback, more or less. So a strong move up, 50% pullbacks down here. The market found buyers around here. Other ways to look at it would be the market was pulling back to this previous high here and this previous high. It's possibly what happened. Maybe there were sellers above this high and they scaled in higher and they were getting out at their first entry. Or there were some sellers below this bar like we were talking about. So they sold here, they sold more higher, and then they're getting out right at their first entry. So if they sold here, then when the market came back, they're then getting out of their shorts right here. And we can see the market almost on a dime stop right at this level. So that's something to pay attention to when you're watching the market pull back. So it'll be interesting to see what we have today for the trades. Market gapped up by 60 or about 60 or so points. So same thing. Where would I look for this market to be pulling back to? We have a strong leg here, and as it pulls back, it'll probably want to test this 50% pullback. It'll want to test yesterday's close, yesterday's low, and with us being right in the middle of this range like this, it's not sure what it's going to try to do first. But I think bigger picture, maybe next few weeks, I think we want to be looking at probably something around 57.50. So those are my thoughts. Remember, the bars are larger. Like, maybe some people might be selling below this bear bar here. The issue is this bar is a 16-point bar compared to the bars yesterday would have been like a 5-point bar. So the bars are about 3 times the size that they have been. So if you're going to take trades, then you need to be trading a smaller size to avoid your risk getting too large. All right, guys. I hope your trading goes well. I hope this was helpful for you. Let me know if you have any thoughts or questions, and I'll see you next time.